Part B is our budget statement of cash receipts and cash disbursements. And I've set it up partially at this point already. So let's start with the cash collected from sales. So we are told that we have 50% of our sales are collected in the quarter that they occur, and 50% in the subsequent quarter. So we need to collect in this quarter 50% from the prior period, which is quarter 4, 2007. So in quarter 4, 2007, sales were $400,000, and 50% of them will be collected in this quarter, the current quarter we are budgeting, which is quarter 1 of 2008. So 50% of 400,000 is $200,000, and the same rules apply for our current sales, which are 420,000. So we will collect 50% of them in the current quarter. So we will collect 210,000. So our total collections will be $410,000 for this quarter. Okay. Total receipts. Turning to cash payments, we will have to pay a portion of last quarter's materials. We are told that 40% of the materials are paid for in the quarter after they are purchased and used. And that's 40% of our variable costs are materials. So our variable costs were $225,000, and 40% of them are materials, and then 40% of those materials will be paid for in the subsequent quarter, which is the one we're in. So that yields $36,000. For our current quarter, we've projected $236,250 as our variable costs, and 40% of those costs are materials, and 60% of them will be paid for in this quarter. That yields $56,700 as two items that we need to pay for materials. Turning to labor. Labor is 40% of our variable costs, and they are paid for in the quarter that they are incurred. So we have no payments from the prior quarter, but for the current quarter, we have $236,250 times 40% to get our labor payments, which is $94,500. For variable overhead, variable production overhead, it is 20% of the variable costs listed in our contribution margin income statement, and is all paid for in the quarter that's incurred. So $236,250 times 20% gives us $47,250 in variable overhead. We are also told that all fixed expenses are paid for in the quarter that they are incurred. So we have a projected fixed production overhead of $66,260, but we must subtract depreciation because it's a non-cash item. So we will be paying $64,260 for fixed production overhead. And for fixed selling administrative overhead, we've projected $27,480. But again, we will not be paying depreciation because it's a non-cash item. So we must subtract $3,000 to give us $24,480. Income taxes are also paid in their entirety, and that was calculated to be $36,004. So adding up the $36,000 for materials, $56,700 for materials in the current quarter, the labor, overhead, fixed and variable, and fixed selling, general administrative, and income taxes, we get our total payments, which are $359,194. So if you remember, we received $410,000. We plan to pay out $359,194. Therefore, our change in cash is expected to be $50,806. And we add to that our beginning cash balance, which is $25,000. So our projected ending balance is $75,806. And that's the end of Part B. So beginning Part C, we start with our cash balance for the balance sheet. We take this $75,000 $806 and bring it over to Part C's budgeted balance sheet.